Hello guys, how you doing? How you doing? So guys, has any one of you ever opened the chats using with this ever opened your chats with on these templates and wondered, okay, let me start again. Okay, now sorry. Has any one of you ever opened the chats and see price here and understand that this is price, but then could not understand what this area is all about? Well, this video is to answer all those questions for those who had those questions. So this is the TDI. This is an indicator for confirmation on what the price is doing on the price action that the price is in. So it's called the TDI, the Traders Dynamic Index. So it is an indicator made of various other indicators. It is an indicator made out of various other indicators. So I'm Konam, your mentor from DTMM. Thank you for watching my videos, for selecting this video, for you get your apparent questions answered. So guys, on this video, I'll be talking to you about one of the strategies that this TDI indicator is about. So I made an earlier video of part one of the first strategy that this TDI is that of the first strategy of confirmation that comes out of the TDI. So I'll be talking about the second one on this video. The second on this video. So without wasting time, let's get on with it. Okay, great. Let me clear my screens here. Okay, so from where we left, for those who watched the first video, the first part of the first strategy, they now know where we are now and they are moving on with us. For those who didn't watch it, who didn't have the opportunity to watch it, for those this is their first time on this channel, please kindly click the subscribe button, check out the video in the top card, and if you don't find it there, check in the description box. I've put it up all for you guys to watch. For those who want to join the community, the links to the Telegram channel is in the description. For those who want to connect with me for mentorship purposes and signals purposes, my link is also in the description box. For those who want to see our chats and all, we post those in the Telegram channels, but then they are also available on our Instagram. So please follow us on our Instagram at Defeat the Market Maker. It's the only channel that it's the only page that you find on IG about us. You can click the link in the description box as well for the access. For those who want this PDF, you can go get it in the DTMM channel. So guys, without wasting time, let's move on into this video. So this video is on the second part, the second strategy that is gotten out of the TDI, and that is the swing opposition reversal strategy. So this part of the strategy is known as the counter trend type trade. So what happens in this is for swing trading and position trading, meaning that trades that goes on for more than one day, or a trade that is open for more than one day, is called a swing trade. So this particular confirmation is used to to confirm a swing position, or to get into a swing position that you would have noticed, that you would have seen and would be interested in getting into one. So you confirm your swing trade, or your position trade, your position reversal, or your swing reversal trade, or your position reversal trade, using this strategy on the TDI. So how do one go about it? So let's get on with it into the swing position reversal strategy. So the first thing you need to note is that this is a counter trend type of trade. So what happens is that the markets tends to cycle up and down in a normal trading range the majority of the time. We all know this, right? This is the movement of the, like, this is literally the movement of the price, the way that it goes like this. That's what is being meant there. So at times the market will make extreme moves beyond its normal range, referred to as overbought and oversold areas. So this simply means that since, okay, let me start from here. We say market moves like this in a range. So since this is a range, the high area here, the top area here, is obviously it's going to have a name for itself. And this low area also has a name for itself again. So when price is moving towards this area, it means price has been overbought. And when it is moving towards this area, it means price has been oversold. So this strategy is to catch trade reversals at these areas. These areas, let me use a different color. These areas and these areas and these areas. That's the purpose of this strategy. So when the market is in these extremes, those are the extremes that are being made at the overbought and the oversold areas, there is an expectation for the market to move back into its normal trading range. So this simply means, as we all know, the price, once the price goes, it will have to come back, and it will come back at some point of time. So that is what this section is meant, the sentence that I've just read to you. Thus, the traders look for reversal trades, and those traders are us. It is only us, the 1% of so as we all know that in the forex marketing, in the forex trading market, 99 it's said 90% of traders lose money and don't make money and are just in there to gamble and not knowing what necessarily they're doing in the markets, and not using, some of them not even using any particular strategy. Then we, as traders, the 10% traders, we are those traders that will be looking to take trades at these extremes, for we know that we have confirmations that we use, confirmations to confirm our trade entries. We have patterns that we see, or that we use to see how price is formed, and how price, if price is to reverse in any time, if price is to continue in a particular trend or reverse a trend. We have patterns, we have color coded sessions, we have lots of beautiful things in our strategy that help us and makes us be the fortunate 10% who actually makes money in the forex trading market. So it is at these extremes, us traders, us DTMM traders, look for reversal trades in these areas, because we know that we can confirm those reversal trades. So after we look into spot and we identify a potential reversal trade, we then confirm it with the TDI, with this strategy that I'm talking about right now. So you need to watch this video up to the end for these and notes that I'm going to give you that's going to help you kill the markets. So using the TDI, under the TDI, if you don't know the TDI and know about the TDI, the colors and all that, watch the first video. I'm linking it out. The links are there in the cards and in the description box. You need to watch it for you to understand what I'm talking about right now, and also gain knowledge of the first strategy of the TDI that's very powerful again, that I talked about in that particular video. So using the TDI, monitor the yellow line, and that's the market baseline, on a 4-hour or daily chart. Please, for anyone who's taking notes, take this down, that this strategy, the market baseline, the yellow line, is monitored on the 4-hour chart or the daily chart only. I repeat, only. Take note of that, because that's where most of my students have trouble most of my students and those who have also in most of the students that I have taught this part have made mistakes. They not taking note of that area. So it's very, I think it's one of the most important the most important statements that I've outlined to you in this video so far. This, you need to monitor the yellow market baseline on the 4-hour chart or the daily only. When the market baseline hits or extends, these are the extreme levels that we're talking about here. When the market baseline, that's the yellow line, hits or exceed beyond the 32 being the lowest extreme, and or the 68 level being the highest extreme, being the support, being the resistance, then the 32 being the support. Look for a reversal trade setup that could run for days or weeks. That's where the days is for the swing and the weeks is for the position trades. So that's how money is made. So I now need you to not do anything but be having your pen and your notebook where you have been writing the TDI notes, and I want you to take this down, the breakdown of the strategy. The first one, monitor the 4-hour and the daily charts. The second one, look for yellow market baseline to hit the 32 or 68 levels and possibly move beyond the 32 or 68 level. That is simply breaking the hooking through breaking the sort of like something like this. Let me show you here. So this is the 60, this is the 32. So what's being meant by the possibly move beyond the 68 is this move, then coming back. So price will be coming from this area, then it breaks through the 60, then it comes back, forming a hooking. This is sort of like a hook, a shark fin. You know about this later. This is the move beyond the 68, then beyond the 32 will be like this. So because this is the market baseline, usually it will not be this sharper. This sharp that I put, maybe it'd be something like this. It would be a bit curvy. It would be a bit curvy. So that's what's being meant by possibly move beyond. So that's what we'll be looking. So the third one, wait for yellow to close below the 68 or close above the 32. I hope you get me there. Wait for yellow to close below the 32 or close above the yellow. That simply means wait for the yellow line. If it had it exceeded above the 68, wait for it to come back and close below the 68. If it had exceeded below the 32, wait for it to come back and close above the 32. Don't forget that area. Don't rush into trades while once you see that it just moved beyond. Don't rush into a trade. Wait for it to come back and close above the 62 or below the 68. Then what then do you do after that? Compare the price action to TDI. Those are simple rules from the previous video. Simple as that. You just need to compare the price action to the TDI, and it's really perfect, just like that. The fifth one, enter trade when when green, red, and yellow lines cross over in direction of reversal. This is simply, you then go back to the first strategy now on the signal here. This first strategy on the signal TDI, on the TDI signal, this one. This is where you come back now. This is why you need to watch this video, because you need this particular aspect for confirming, for entering the trade. After after you spot the swing or swing or position reversal trade, right? You're going to need to confirm that trade and enter the trade, and you cannot do so without the first concept that we talked about in the first video strategy of the TDI that is linked in the description. So you need to watch that without fail. So this is let me take note on it so that you know what I'm talking about. Refer to part one. Refer to part one. This is for the what's it called? Refer to part one. Refer to the part one. For 5. For 5, refer for part one. For 5, refer to part one. That's the only way that you could use this trade signal and enter and use this beautiful strategy. So write this down. Also write this, refer to part one, and the link is in the description below. Then the sixth one, exit when the trade when the green line cross after the crossover of the yellow lines. This is the same thing. You need to refer to the part one too again. So guys, as simple as that, you have your beautiful TDI strategy. Voila. I hope this is an aha moment for most of you guys. For this was really simple and is really simple again. So this is the strategy number 2. Now moving into an example. As you can see, the yellow line. So on your charts, of course, you'll be having all the lines, but we just muted the other color lines so that the yellow line may be clear and visible, and the most will be understandable. So as you can see here, what's going on? As you can see here, price reached the 68. Then here again, price reached the 62. And this area price exceeded above the 60 through the 68, and then went on to come and close back below the 68, and that's encouraged. Then went on back again above the 68, then went back inside and closed below the 68, and our trade entry would now be around here. This way we expect our limit mark our trades areas. Yeah, after it would have closed below the so it will be this area, and it will be this area and this area, with this area for this area. It will be this area for this area. Really beautiful, right? I know. Then this area for this area. So now we know that it's going to go bullish because of this confirmation. So for this one here, it's this area for this area. So you can see how one could be making money. So you look for the market baseline reversals on the H4 time frame. This is on the daily. Take note that this is on the daily. This particular example is on the daily, so you can imagine how many pips you'd be getting from just this strategy alone. Guys, you're learning too much. This is the second strategy of the TDI. We are still left with three more powerful, even way more powerful. Yet what I'm giving right now is really powerful. Someone could get paid by using these strategies, the 2 strategies that I've talked about so far. Only those 2. So imagine after getting everything, after getting all the knowledge. So guys, you need to know this and understand this. So as you can see, our market baseline this is on a daily chart, EJ at the 68 level, aligned with TDI signal. The TDI signal is the the one that I said we should refer to part 1. Link is in the description box to understand the way you enter your trade. So after one knows where to enter, according to price, the entry will be there, and according to the TDI, the entry will be there again. After the signal crossovers and the market baseline closing back below the 68, that's where the entry will be. And man, you get paid. Trust me, you get paid. This is on the daily, mind you, so you actually get paid. So that's why these trades are recognized as that's why these trades are recognized as swing or position trades setups. So guys, that is it for our video. Um, um, that is it for our video. For more, click the subscribe button, the notification button, and press like so that this video, the YouTube algorithm can help share this video with other traders like you. They can help. It helps discover this channel, and it also helps you get suggestions of similar videos like this one. So it's a sort of like a 50-50, because you'll be getting more access to more knowledge and more resources like this that are available on YouTube, but maybe you might not be getting access to that, but then YouTube will do that for you, so that they just show up, pop up in your suggestion video box. So you just need to do that. So guys, peace. See you on the next one.